Good afternoon, everybody. Hope you're doing well. Let's get into the daily market recap for today. It is the 20th, January 20th. A couple playbook trades today to review quickly here. SPX. So we talked about using SPX as a way to simplify the action today. I saw two setups today in review that were pretty good. The first was just a reclaim of the 68.45. We pulled back into the 50-day and held. That was around 68.30. So just a couple points above that, and then got this nice reclaim. So that reclaim entry ended up paying quite well into, we had a 68.80 target from our prep, didn't quite get there, got about 9 points from that. And then we rejected that target area and started to kind of chop around. Once we broke back under 68.45, that's what set up a short. And in particular, I think this rejection here was a good sign. And then if you missed that entry, the next best entry is this little bear flag break that sold into 6,800. At this point, psychologically anyway, you have an attempt to sell below the 50-day that failed and then held, but then bulls failed to really hold this next leg, which just gives you confidence once it's lost to take the downside. So I thought that was pretty good today. MU opening drive was good. It was very fast though, so an understandable one to miss if you missed it. But we prepped for this, and it ended up playing out pretty well. We got this pop up in the pre-market that made it a little bit more nuanced, but you did get a little reaction around the open. So if you're focused on it, you could have caught a decent entry. And this is just pretty straightforward. It had a really nice setup from Friday as a continuation trade, and had relative strength to the market on the gap down with the memory theme in play. So it's very straightforward. You just buy the break at the prior day high, control the opening print low, and then let it play out. And we went straight into our target of 380 today, by the way, which happened to be about an ATR move, and that ended up being the high for the session. SNDK, same concept as MU, a little bit worse of a daily candle, but the range has still been pretty good and it hasn't trailed a prior daily bar yet, so that keeps it in play to the upside. And then a similar reaction at the open, a little more nuanced because it's running and traversing back through the range versus just breaking out over highs like MU. But nonetheless, once this got back up to the highs and broke the highs, this is just a breakout through that prior day high. Which ended up paying well for more or less a scalp, and they ended up getting a nice trend move into the close there. So I thought that was pretty good today as well. So our focus in the memory space was worthy to consider going into the week, and ended up playing out well. S&P, we talked about a bit here as far as the trades, but as a review where we're at now, we had this ascending triangle set up on the daily, finally broke after trapping once last week in the way of a big gap down, and ultimately closed on the low. So this is actually a really nice continuation setup. We have 67.62 support below. This is a very key spot from October 10th last year. We had a big 3% down day. That area has been validated several times. So we want to look for continuation into that. If we defend the 6,800 support, then look for a traversal back up in the range to 68.45. As far as active positions for me, I have no active positions. Space Monkey is holding 3/4 of SNDK. And watch list for tomorrow, Boeing, really, really nice relative strength. It's obviously been a changing character. We've talked about the stock a bit more lately. So it's just continuing to look for opportunities to get long the stock. I think this has potential to gap up today or tomorrow. So we'll see if it does. But nonetheless, if we break out the highs, watch 255 above. I have 254.87 specifically above as resistance and a target. If it starts to pull back, wait for it to pull back into the 90 EMA to get a reaction, and then take a little bit more time to set up entries. SNDK continues to see this range expansion, but it's a fairly steady slope higher. Today was a pretty big candle, so we'll see if it can get continuation over the prior day high tomorrow. Once this goes a bit more parabolic in the way of a big gap or breaks the prior day bar low, then we can start to think short. But until then, the pattern is to the upside, so we want to continue to watch that. And then I think just S&P is a nice way to simplify going into tomorrow. So continuation under today's low, 67.90 or 6800 you could use, depending on the timing where we gap. And also, if we trap this area and then reclaim 6800, I think 6820 calls can be a nice quick trade for a move back up to at least the 50-day, which is around that 6830 area. SLV has been in play. It's harder trade, but something to watch here. Pretty standard rate of change still. Like we're still you know, as much as this has risen, it's still not checking that many boxes for reversion yet. There are, you know, some, and there's, you know, theses out there, you know, proposing that it's gonna, you know, pull back, or it's run too hot, etc. But just technically speaking, this is doing what it needs to do to sustain the rally. We back tested this prior high, 84.78. And we'll want to watch that in today's lows for a pivot into tomorrow, depending on if and where we gap. So two-way trade here under today's bar low, I think is a nice setup for exhaustion back into the gap for the downside for puts, and then for the upside, as long as that holds, I think we can play the upside. And the target above that we have is near the pre-market highs, around 87, and then 89.62 above that. So continue to keep an eye on silver. We'll keep it pretty quick and efficient today. I hope you enjoyed the review. If you have any questions or anything you specifically want me to, you know, talk about on these recaps, just let me know. But have a great evening, and I'll see you all in the room tomorrow morning.